Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for January 21st, 2022. Let's talk about stocks, and yes, we're having a doozy of a day today. We're seeing rather large drop in the market. We did anticipate the market kind of going up and down. We got a lot of volatility happening in the next 60 to 90 days, but we keep reminding you, stay the course. We're looking for a positive year in the end. We're still seeing a lot of good fundamentals with the companies. We're still seeing a lot of good earnings. We're still seeing a lot of demand. But yes, there are tensions overseas. We're seeing a lot of things happening. So money is down, and that's what we're going to get into today. We'll tell you a little bit more about the specifics. So equities, we're down sharply across the major global indices. The primary concerns were around interest rate increases to combat the surge in inflation, in addition to military buildup in the Ukraine by Russia and NATO forces. So the Russell 2000 was down 8.07% for the week. The NASDAQ dropped 7.55 and the S&P was down 5.67. Note that year to date, the NASDAQ has dropped about 12%. Any index that declines 10% or more in recent high is considered in correction territory. So we definitely are seeing that happen. Overseas developed markets, which is the EFA, declined 2.08, and the emerging markets is down 1.04% for the week. So, and take into consideration, look what we did last year. A lot of the blue chips were up, our portfolio was up almost 30%. So you're seeing over the last 2 years, we've seen some good growth. So we're starting to give a little bit back, but we can't always go up and up and up and up and up, okay? Let's talk about fixed income. Rates declined as values rose last week, with the benchmark 10-year treasuries ending the week at 1.75%, down 3 basis points for the week and 12 basis points since Tuesday. The yield curve flattened in anticipation of rising interest rates from the Federal Reserve in the coming weeks. And if you remember, just a few weeks ago, the 10-year Treasury was at 1.4. Now we're at 1.75. So let's talk about gold. The price of the GLDM, the Precious Metal Strategy and Endowment Series holding, moved 0.8% higher last week on continued concerns about inflation and stock market volatility. Over the past month and the past 3 months, gold has risen 2.43% and 3.23% respectively. Now, economic data, the Philadelphia Manufacturing Business Outlook Survey rose strongly from 15.4 in December to 23.2 in January. Prices, shipments, numbers of employees, and average work weeks were in key drivers to the index strength. This is what we're talking about. We should still have a good year. Let's talk about company news. Netflix, a Core Select and G33 holding, reported results that beat expectations on revenue and earnings, but management gave poor guidance on subscription growth for their service last week, and the shares were down 24.39%. Procter & Gamble, which is a G50 and contrarian holding, rose 2.31% last week on strong sales and earnings reports that beat consensus expectations. Management also raised guidance for organic growth, which includes stronger pricing. That is it for this week. Remember, stay the course. We're going to be up and down, but as long as we have safe money, risk money, money in different buckets to pull from, we can weather the storm, make sure the income, and that's why we do different allocations and make sure we have some safer money there for you. So that's it for the week. Thank you so much for being part of the ARA family. If you have any questions or concern, please give us a call at 855-756-5700 or visit us at aradvisorsinc.com. Don't forget to check out our Facebook and YouTube pages for more great information, and scan the QR code at the end of the video to subscribe to our newsletter if you're not already receiving it. God bless you. Thank you for watching, and we'll see you again next week.